following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' theme means it's time once again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the ever-expanding and ever-popular, ever-dynamic Options Insider Radio Network. Speaking of ever-popular and ever-dynamic, I am joined today by the man holding down the Options Express hot seat, the man, the myth, the legend himself, none other than good old Alex Jacobson from Options Express. Alex, welcome to the program, sir.
Hey, Mark, good to be here.
After all that build-up I give you, that's what I get, huh? I expected a very, very grandiose response to my even more grandiose setup.
Yeah, after my last couple days, believe me, good to be here is good to be here.
And everything okay, Alex?
I had a little surgery on Thursday. So,
oh, no.
And it was supposed to be outpatient. It ended up being under general. So it takes a couple days to kind of get things going again.
And listeners, that sound of that raging orange line means we are joined by none other than Senior Sebastian himself, good old Mark Sebastian from OptionPit.com. Mark, welcome back to the program, sir.
Hey, good to be here, guys. How's everybody doing?
We're doing fine. Alex is holding down the fort admirably over there at OX these days. Getting back in the swing of things after a few days off. And
he's the people's champion. That's what we call him
indeed.
Here.
He and The Rock. Is that who the other one was, The Rock?
Yes.
I thought I was the people's champion.
There he is, beaming in all the way from St. Charles, Illinois, none other than the people's champion himself, a.k.a. Uncle Mike Tosaw from Know Your Options, Inc. Uncle Mike, welcome to the show, to you as well.
Always a pleasure to be here.
And listeners, we have a rare treat as well, joining us in the background because he's a local boy today. He's not beaming in from the great state of Maine. We have none other than Andrew Giovinazzi, also from Option Pit. Andrew, welcome to the program, to you as well.
Thank you. No elbows will be thrown here.
No elbows.
I will reserve all that. I will let Michael.
We've got Option Lobster to keep me on under wraps today. So
you might be throwing some elbows for who gets mic time, the most mic time, though. I don't know. If we hear any fisticuffs over there, I'll be sure to send the police.
There's a bag of golf clubs in here. We've already got them.
I cede to Jacobson. That's my general rule of thumb. Is if normally I consider myself the smartest guy in the room. When I know I'm the smartest guy in the room, I let the second smartest guy talk, and that's Alex. So Just kidding, Alex.
All the love for Alex today. Poor Alex.
I love Alex. I'm giving him a hard time because I haven't
in recovery mode, beating the man while he's down.
We haven't gotten him on the show in a while, and I'm really excited that he's here because, we've done. I think I've done 2 or 3 shows with him, and each of those shows has landed in my top 10 favorite option block shows ever. So, I jest a little bit, but it's really cool to get to do a show with one of the legends, and Alex Jacobson is.
Geez, I'm going to have my wife start the car from the next week just to make sure I'm safe.
a little kiss of perhaps love from Mark Sebastian. We never know with him. But yes, before we move on to car bombs and indeed battling with elbows over microphone time, we're going to go right into the trading block.
The trading block.
All right, and welcome to the trading block. This is where we talk about what was trading, what was moving the old market today. And it was a bit of a mixed bag on the day. We ended up closing unched to a little bit up across most of the major indices. We had some down movers on the day with, of course, the big fruit company leading the charge. To the downside, good old VIX cash also closing up about 1% on the day to a little over 16 and change. Perhaps we shall start there with both of the 2 heads are better than one over there at Option Pit. What caught your eye the most in today's activity?
We were looking at gold and the euro, and via that I mean FXC. Vol in the euro, dirt cheap. Vol in the GLD, cheap, and GLD starting to kind of start making a little bit of a realized volatility move. So, I'm not a lot to complain about with that one right now. So those have been the 2 that really caught our eye today. One of the trades that we were looking at was in GLD. It seemed, or at FXC, excuse me, they were kind of bidding for gamma, and this has been kind of the theme this whole clip. Nobody seems to want to own Vega, but people want to own a little bit of gamma. So. That's really what we've been seeing, and I think that's kind of what happened here.
That's been the trend for the better part of the past couple of years now with the explosion of the weeklies. All the love for Vega has left the room, and everyone's enthralled with Gamma and Theta, and that's kind of where all the action is these days. Hence 5 strips of weeklies, hence minis coming in to make that even more viable in certain products. Just everyone's diving onto the Gamma train. Gamma train, is that what they called you in high school there, Uncle Mike?
Come on, ride the train and ride it Gamma.
Yeah, but I don't know what to say after that. That's what they all used to. That's what they used to say when I played football in high school. They just started chanting Gamma, Gamma, Gamma.
They didn't know why. It just sprung top of mind to them.
It was more slang. They were saying Hamma, Hamma, but he thought they were saying Gamma because his love of options was so incredible.
Huge.
That's true. You did have the puffy pants. You were a big Hammer Don't Hurt 'em fan back in the day, weren't you, Uncle Mike?
Stop hammer time, baby.
That's a horrible image. You with the MC Hammer pants. I have it in my head now and it won't go away.
Oh, I love that. That is brilliant.
That's my gift to you then. It's my Christmas gift to you there, Mark Sebastian. Enjoy.
I don't even know how you manage that view. How do you manage that
you don't.
View?
You just let it go away, hopefully.
You accept it. You love it.
You can't touch it.
You let it burn deeply in. Oh, God. There we go. Those are the kind of jewels we get when Andrew is in town. But Uncle Mike, I know, of course, a lot of your days, Mark just talked about gold. Gold having an interesting move to the day, up about 0.5% or so on the day today. Of course, your other major interest moving down, still continuing the downside. Maybe we'll start there. I know you were talking last show about how the vol levels in Apple were starting to lure you back to the downside, and you had indeed written some downside puts in Apple. What's the ongoing plan? Are you starting to write more? Are you bringing more clients back onto the short put train? Are you playing wait and see? What's the game going on in Fruitland?
Well, a couple things in Goldland and Fruitland, we'll say. Let's start out with Fruitland. Gosh, in Fruitland.
I didn't know we were talking about Mark Sebastian's hometown.
Pause, Sebastian. Come on. You could have had something going there.
No, it was there. I was like, You know when somebody throws you like that hanging curveball and you see it and you're like, I must destroy this, and like then you swing and a miss because you're trying to swing too hard? Kind of just what happened now.
Ah, too bad.
Sorry.
In the Apple land, what we're short the 530 puts for December right now, and so I bought a hedge at the. We're playing this as a cash secured put, but I bought a put at the 485 level as well, just in case. You never know. And this isn't going to be near the position that it once was, but I am starting to build a position in Apple again. I like these levels right now. In gold land, I don't know. It's just looking in general across the marketplace. Did anything even trade today? Where the market's even open? But gold did have a little bit of a move to the upside. I got put gold last weekend, or last weekly expiration. I was short the 166 puts in GLD, and so I have reinitiated the collar. I am now short the 167 call, and just playing the weeklies for the time being. And if we start to move to the upside, I will not be shy about rolling it upward, as the new weeklies allow me to play it a little bit closer than what I have in years past.
You know, that's something that I noticed probably about 6 or 8 months ago, maybe a year ago. First was how my trading style had evolved, and my time for my initial trading style had evolved, because it was a time, and I always make this joke on the show, underlying what's that? It was a time when I would never touch underlying with a 10-foot pole, and I've noticed over the past year or so, as my schedule has increased doing other things, once in a while some underlying tends to creep into my account every now and then, and more often than not these days, things are getting put to me because don't have the time to roll them, or don't have the time to move them or close them out prior to expirations. So that was my first indications that maybe I need to adjust what I'm doing, because I no longer have the time to stay on top of these things like I used to. And when I started showing up, all of a sudden I had some ETFs in my account and some Ford and some other things. I said, wait a minute, whose account is this? It certainly can't be mine.
Well, this was on purpose. I have no qualms about having a little bit of underlying won't hurt you. That's what I say. Anyway.
I'm saying that was my wake-up call. I'm certainly no Andrew, where I just love buying naught but stock, as far as the eyes can see.
I'll tell you, I'm with you, Longo. I've used, I'm debating taking delivery on some Zynga, because Andrew got me on the Zynga.
Don't let Andrew keep whispering in your ear on the Zynga. I can see him in the back right now.
Zynga.
And now I might be back.
Yeah.
That's the worst part. I was out, now I might be back in.
Every time he thinks he's out, they pull him back in. I think, I'm with you. I cannot stand owning stock. And, there's some things that I'm thinking about, sometimes it makes sense. And that's one where, maybe I'm looking at it. We will see.
So, Andrew, I think it's on just the most recent show, didn't you officially and finally for all time renounce Zynga? And now you slept on it over the weekend and now you're back?
Well, it's one of those things where I keep looking at it, and then it just calls me back. Sometimes there are those names that do that, which probably means you shouldn't.
I can relate to that.
But this is, I'm feeling there's a lot less downside in it now than there used to be.
I concur.
I think when last we talked, it was the 2 half puts that had attracted your interest? Is that still where you're hanging out?
$2.20 to me on selling puts against. For selling puts at the strike. So just, if any, that kind of value looks interesting. So like the 2.5 puts for a quarter, 35 cents, stuff like that.
Famous last words. I'm out, I'm in, I'm done. Wash my hands of this horrible atrocity. I'm back.
Very sad.
I love it. Alex, I know you've been otherwise occupied for the past few days, but anything catch your eye getting back in the office today, talking to the trading desk, hearing what was a flutter over in the land of OX?
Denradon calls were active today on the desk. I always send an email before the show down to John on the desk, and normally he comes back with Apple, Facebook, Google. Today it was the Denradon calls which were active. The desk did a lot of stuff and a lot of volume in Denradon. So
that's interesting. They got an AIDS drug or something like that getting ready? Another one of those getting ready for approval or something?
It's still a $5 stock, so I don't know which of their products is up and when it's up.
That stock has been $5 and triple digits, more times than just about any other stock I can think of. Or, $30.
It has. Go ahead, Mark.
Oh yeah, I mean it's just crazy the way it's moved around.
Yeah, it has broken more hearts than than one can imagine.
Yeah, that has been a regular on our odd block over the past couple of years, making a number of appearances. We don't have it in there today, but some interesting stuff is looking at that 2-year chart.
You might see it tonight.
Giving Andrew some ideas as he preps for the Andrew block, aka the odd block to come. But I'm looking here at this chart of Dendron, of course, ticker symbol DNDN listeners, and this is just a heartbreaker and a half right here. It's trading 40 a little over a year ago, gapping straight down south of 10, dramatically south of 10, and then just never really looked back.
So many hearts.
This is the Netflix of the biotech sector.
Oh, it's beyond that. I mean, this guy has been, look at, if you want to see crazy, don't just pull up a 2-year chart, pull up like a 6-year chart, and you will see a stock pattern that I'm not sure there's another stock that has anything like that. It's crazy. It is absolutely nuts.
It's like they had some rolls of some existing positions or some maybe some verticals even going on out here in Dendron calls. Of course, as Alex said, trading $5 is about a almost $5 even stock right now. So compared to Zynga, it's very rich. You might want to watch out, Andrew, when wading into those waters. And that's going to do it for the old trading block today, and now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and that funky tune means it's time once again for the odd block. And as I have done on some recent programs, I of course have mentioned that we have good old Andrew from this very same show, the Rock Lobster himself, contributing a significant amount of unusual activity these days to the Options Insider. So I thought rather than have me go through some of his stuff secondhand, since we have the man himself on the show today, beaming in all the way from Chicago, Illinois, then I thought we might as well have him run down what really caught his eye today from an unusual activity perspective, and what he thought was interesting enough to write up for you good folks, the listeners. So Andrew, take it away, sir.
I have to say I look for stuff, and I look obviously for things a little out of the ordinary, a little funky. But I found a fruit stock.
Wow.
But not apple.
What?
Dole pineapple.
Dole pineapple?
Done and done, sir. Genius.
He's diversifying. Apples and pineapples.
Okay, apples and pineapples. This is a stock that trades. The average volume in this option volume is, let's just call it low. Our option volume. Let's see.
Yeah, it's ridiculous. The average daily stock volume is 406,000.
It's almost nothing.
Yeah.
Now, here's a good thing. I have a trade here. Early morning paper sold a Jan 12.5 puts for $1, hitting the bid at the time.
Ooh.
Okay, for 2,000 contracts. Now here's the good part. Guess how many options traded on the day? It's like
2001.
something like that on the day. Almost nothing.
Yeah, 2,062 total.
2,062. So without this block, there was no fruit traded.
Yep.
This is quality, and there's some open interest there, but there's a ton on the calls.
It was kind of interesting. So it looks like somebody. Also, I noticed here with this stock, it's traded as high as 11.92 today, and it hit a near-term low not very long ago of 10.89. So I think this is a guy making some money, selling some puts the old-fashioned way.
I like it.
Okay. What else we got? I've got.
Well, before you jump on, did you see the open interest on those calls there on that Jan strike for a name that trades nothing? There's 32,000.
32,000.
Yeah, huge.
Wow.
Yeah, that was from. Looks like that entire
blockola.
A huge portion of that blockola was from October 19th when the stock was trading 12.21. Buyer came in. Looks like it was a vol buy. And he paid 90 cents on those back on October 19th
Ugh.
with the stock trading 12.21.
Hopefully he got a ton of stock off.
Super pleased with that purchase.
Hopefully he double hedged to the downside.
You might be trying to finance him selling the puts.
Yeah,
that's what I'm thinking.
That,
he's doubling down here.
Yeah, that's some crazy trading there.
That is some crazy trading.
For a name that does nothing, to put on 32,000 in any strike is some serious action.
Gotta love it.
It's just 32,000 contracts.
What's the worst that can happen?
Well, nothing can happen. The next one I have is EEM. I'm trying to. It looks like paper's selling the Feb 40 puts on splits at the time. At the time, it looked like it was hitting going actually through the bid to put up a 54.5-cent print. I think this guy actually, now these had traded 78 cents before. I think this is actually a guy that had some protection and he's trying to get out of it. That's what it looked like to me.
Mm-hmm.
Pretty heavy, 2 big blocks, 10,000 contracts apiece. On December 5th, 16,000 contracts went up for 78 cents. Kind of smells like some rolling protection on the EEM. That's kind of how I see this one. Not really moving the volatility needle whatsoever. But this is another one like all the indexes. 30-day implied volatility is a little over 18. 10-day volatility is 8.78.
You know, Mark, that is the kind of information you just don't get anywhere else other than the Option Insider.
Juicy.
Yeah, I mean,
literally, in the case of Dole, quite juicy.
The 10-day vol 8 3/4, the 30-day vol in implied about 18.5. So you're dealing with a 10-point spread vol to vol, and that's incredible. After today's stinker of a move, we're gonna be looking at below 8%, and that's just these spreads. People are, Alex, I'd love for you to chime in on this, maybe during the Xpress Block, but people are sitting there lamenting the low VIX and low vols in all these stocks, and then I look at the spread between realized and implied, and it has me wondering whether this market is more insured than maybe people realize.
And I got one last more to prove the point.
All right.
Here that Mark and I were talking about this one earlier. In another ETF, EWJ.
Ooch.
Okay, listen to this. So it had a huge range of like 4 cents today, closed around 9.33, 9.34. The trade was selling the March 10 calls for 9 cents. Okay, in blocks of basically 99.99. It just won under 100,000. I've run under 100,000 and 48,000 contracts for 9 cents. So around just about 250,000 contracts.
Wow.
That was a big trade.
Big trade. Total option volume on the day was 764,000 contracts. So most of the trade was in these blocks.
Mm-hmm.
Vol down on the day.
Yeah.
Okay. Now here's the interesting thing. Open interest was 341,000 contracts, and the same calls traded the same price for 300,000 contracts on November 29th.
Yeah, so
This was the do-over.
He's just loving his broker is what he's doing.
Yeah, we spent all day trying to figure out what the hell was going on there.
He said, I need to give a Christmas gift to my broker. I'll just wash 300,000 calls.
Someone needs to buy some brandy.
Exactly.
Let's do this trade twice.
Mark said, there's no way this guy just closes. He's like, oh, wow, these could just be closing. That sucks.
Yeah, but just ridiculous.
Yeah, so that was my rundown today. I've got one more for you later, Mark, but that's what I've got so far today on my...
That just goes to hammer home, I think, if there's been one theme we've had to the Odd Block over the entire run of this show, 2+ years, 200+ episodes now, it is that the size money is not... people associate it as being the smart money, but the size money is not always, and probably usually is not, the smart money.
I think there's a difference between size money and the real big ridiculous trades.
Yeah.
If they're doing a real big ridiculous trade in a $9.35 stock on a 9-cent option, if you're trading a huge volume in a 9-cent option, you are probably not the smart money.
Probably not.
I've almost always found that. The one thing I'll tell you, Mark, the one thing I gotta get Andrew trained on is the unusual volume in the $2 high gamma stocks, so that we can start.
That's our signature.
The signature Option Insider unusual activity.
Bought 50,000 upside calls for 20 cents in a 30-cent biotech.
Right. That is the signature of the Option Insider podcast.
I've got to find those trades.
Yeah. So,
Those are juicy. That's gold.
anyway,
But yeah, some good stuff, some interesting stuff going up in that EEM too. I was clicking around on it while we were talking, and there was those March 40 puts and also some March upside calls, the March 46 calls.
There was like, I think it's hard to tell that they were all like a combination of trades, but kind of know that volume begets volume and some of this stuff.
Yeah.
I mean, an EM vol is kind of near basically its all-time low since the product got listed. Granted, HV is basically at the all-time low since the product got listed, so it should be that cheap, but just something to keep an eye on. There's typically no ETF that has the more overpriced volatility than EM.
It looks like someone was aggressively closing across the board or rolling, perhaps. All these strikes have tons of open interest on them.
Closing, so these look like a closing. He bought some protection and then closed. I shouldn't say he, but they bought some protection and closed some.
I think you're relatively safe in that guesstimate.
It's only 99% certain it's a dude.
Right. But equal opportunity here.
Yeah.
Somebody could take a 20-cent bath on their protection, just like
It could be Anne Marie trading those.
Could have been a gender neutral person, Pat. You never know.
Neutral trading. Just until the neutral trade.
GTT,
Exactly.
that's our new trading firm.
There you go. That's the new name. GNT, Gender Neutral Trading. I like it.
Yep.
the new home of Mark Sebastian and Andrew
There you
Giovinazzi. Well, thank you for that, Andrew. I love having a new voice on the Odd Block because it certainly saves mine. And so that's a perfect. Thank you for that. And now we're going to close out this edition of the new Odd Block, and we're going to dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is indeed the portion of the show where the boys from OX take the reins and I get to take a rest. And the man in charge of the Xpress Block today is, take a guess, listeners, see if you can guess, none other than good old Alex Jacobson over there at OX. And Alex, when last we spoke here on the show, we were diving into some of the interesting things, some of the interesting findings you're generating over there in the Idea Hub at Options Express. So anything over there in Idea Hub land catch your eye today or indeed generate a lot of traction with the OX customers?
Yep. And actually today an interesting trade came up on the Hub. It's a Apple week 2, weekly expiration. The 500-490 put spread trades for about 80 cents. And you're going out a week at a 41 volatility, which is the Apple VIX. That's one standard deviation out of the money. It's almost an 8% return on risk. What I mean is 80 cents on $10 risk, and it's 1 sigma out. So that was one of the interesting ones that came up today.
So what were those strikes again really quick? 540 what?
The 500, 490.
500, 490.
Credit put spread. Apple's trading around 429 and a lot of change, almost 430. So it's 30 points out of the money.
530. It'd be a nice discount if it was trading 430. Tosaw would be in trouble, I think.
Oh, I'm sorry, 530. I apologize. Sorry about that. But yeah, one comment about volatility in general, and Mark talked about this. We're trying to build out this premium harvesting tool into futures options now. And one of the challenges we're having is we're looking at the most liquid futures options, underlies. And there are things like the 10-year and the 30-year and the, as Mark pointed out, the yen and the euro. And we're having difficulty modeling a 1 sigma, 1 standard deviation out of the money product that has any meaningful kind of return given the risk, because the vols are nothing. I mean, just nothing. The vol on the 10-year is under 4. When I came to work at Options Express, the vol on the 10-year was, in the 8 area a couple of years ago. It's just astounding how low some of these vols are. And traditionally, in my experience, low vols always seem to precede some event. Sometimes it's a big move up, sometimes it's a big move down, but low vols are an interesting environment. And the thing about low vols is traditionally, as I say, in my experience, it's a time to own a strangle or own a straddle.
Now, Alex, speaking of low vol, I want to pick your brain a little bit. Don't, of course, give away any trade secrets over there, but I know I am curious, and I'm sure a lot of our listeners are curious as well. When you say the Idea Hub highlights something like a $10 put spread here, out of the money put spread in Apple, what's some of the machinations that are going on behind the scenes? Is it comparing that to, let's say, historical vol levels on those strikes, and it found the current vol level is X% higher, so it highlights it? How does it go about highlighting these scenarios?
It's a great question, Mark. What Idea Hub does is it takes the 16 volatility benchmarks that the CBOE calculates on things like Apple, Google, Goldman, Amazon, IBM, the S&P 500, the Russell, the NASDAQ. But basically what CBOE does is it calculates, the thing that most people are familiar with is the VIX, which is the volatility benchmark for the S&P 500, which means it's also the volatility benchmark for the SPDR and the SPX PM. It takes that live quote from CBOE, and from it calculates a 1 standard deviation out of the money distance. And then what it does is it searches for spreads. It searches for credit put spreads, credit call spreads that trade for at least a quarter. So a lot of times it's going to eliminate a lot of the spreads that will come back because they're trading for 7 cents or 8 cents. But the cool thing about weeklies, especially in the Apples and the Googles and some of the stuff that still has some vol in it, I'm looking at the list right now. Apple comes up a lot. Goldman comes up a lot. It will calculate if the stock is over $100. It looks for $10 wide credit put spreads, credit call spreads. If stock is 50 to 100, it looks for $5 wide credit put spreads, credit call spreads. Under 50, $3 wide. But it's all quantitative. There's no technical analysis in it. There's no fundamental analysis in it. It's purely quantitative. It's just looking for things that have about a 70% probability, given the current volatility benchmark, of being profitable. So it's agnostic in a sense that it's just using data. It's not using any technical analysis or comparative analysis. And the cool thing about it is you get this live quote from the CBOE that comes across as, looks like a real quote. As I said, the challenge we're having is we're trying to apply that same methodology to the E-mini S&P, the E-mini NASDAQ, the crude oil options, and some of the challenges, some of the issues in the 10-year and the 30-year, there's just no vol. There's just no vol. In the 10-year, if you go 1 sigma out and round out a strike, premiums are nothing. So it's an interesting time in the volatility world.
It looks like there was some love for this spread, perhaps with OX customers here. There's significant volume on both of those strikes. Of course, the 500 strike is somewhat of the strike du jour in Apple. It seems like every week there's a lot of love, a lot of open interest piling up on that 500 handle. So perhaps some of that was that as well. But it looks like a lot of OX customers may have followed your suggestions here, Alex, and jumped into that put spread.
Yeah, what we found is this has only really been up a few months, and it is, last time I heard, the 15th or 16th most used tool here at OX, and we're still exposing it to customers. I do a webinar on it tomorrow at 3:30 Chicago time. And of course, this time of year, our seminar schedule has kind of wound down, and our webinar schedule has wound down a bit. But if you are an OX customer or you're a Schwab customer, because you can see this on Street Smart Edge as well, the Ideas Hub creates a target-rich environment where you can look at both premium harvesting ideas, earnings ideas, quantitative covered call writing, shooting for 7 or 8% static returns. I'm looking at the earning page now, and it's showcasing Hovnanian coming up on December 13th, Dollar General tomorrow, Adobe on the 13th, Sienna on the 13th. So it's a great tool. One of the things we found, though, with customers is oftentimes, even though we format the idea generated as a spread, our customers will take the idea, which if you hit the trade button on it, formats into our all-in-one trade ticket, and we'll take the put spread, the call spread, or the iron condor. That's the three things that premium harvesting generates, and they'll knock out the long legs. They'll just want to be more aggressive. So
degenerate premium sellers, I love them.
Yeah. Well, instead of selling the spread, they'll simply take away from it that you're one standard deviation out, and I simply want to sell the premium. And that's why here you'll on a day like today, you'll see a disproportionate amount of business being done in that 500 put as opposed to the 500 490 spread. And weeklies have given those investors who really understand what they're doing just more opportunities to harvest premium.
See, Alex, you can only hold their hands for so long. Eventually, they're going to say, Uncle Alex may really want me to buy this 490 puts, but I'm going to say the hell with him, and I'm going to do 3x of the 500 puts and leave the other leg open, and I'm just going to roll that way. So there's only so much you can do. You can lead them to water, but you can't beat them in the head and make them drink, unfortunately.
Yeah, and that's the great thing about companies like Options Express. I know it sounds like I'm preaching, but we essentially empower investors, and where they go with it is, they're choosing.
Well, speaking of empowering investors, that's a perfect transition, a perfect segue into our far too infrequent listener mailbag, where we give you, the listener, a chance to empower yourselves and show up here on the show on the old All-Star panel. So without further ado, let's get to it.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, and welcome to the old mailbag. Of course, this is where you, the listener, get your chance to give us your 2 cents, or perhaps even 3 if you're feeling generous. And we have a couple emails today. The first one's a kind of a more old school one, and the second is a little more timely. Alex, I'll be curious to hear your opinion on this first one. This is an email from Stephanie C. So there we go. There's a woman out there lurking in the audience. She's the 0.01% of you. So there we go, Alex, or I should say Andrew. Maybe we should be more gender neutral when we're doing our discussions here on the show. But she writes, I hear you guys use the term paper all the time. Where does it come from? And what does it mean? Well, we just used it in today's show. Usually that term comes up in the odd block, and what we mean really is order flow. Paper is our kind of shorthand for order flow. And I've always thought of it as just generating from back in the days when paper tickets were the norm. And so when a customer walked into your pit, a broker had an order from a customer in your pit, he had a stack of paper tickets. So I'm assuming that's where it originates. Alex, you predate me in the old options realm. So is there some secret hidden origin of the term paper that I am missing?
Nope, you're spot on. That's it.
I was hoping you were going to tell me in 1976 on the Pico, someone had a hot dog one day, and he rolled up the paper bag that came with it and threw it and hit Charlie Krausman in the head, and that's where we got the term paper, and it's been that way ever since. I was hoping for something like that, so I made it up for you, Alex. Okay, there you go. All right, next up, we have an email from Tully. I'm assuming Tully is a man, but you never know. We could have two. A record for the option block, having 2 ladies writing in today. And Tully goes on to write, do you think this is a good environment for collars, particularly on some high flyers like Apple, Google, Amazon, etc.? Also, what is the best way to structure a collar? Thanks, and I'm a long-time fan of the show. Well, thank you, Tully. We love the listener love whenever it has a chance to roll in. And the first part of your question is an interesting one. Of course, we talk a lot about this subject on the show here, particularly with Uncle Mike and you boys from KYO. And as Uncle Mike, as I'm sure you're contemplating a few collars in Apple right now, perhaps I'll let you dive at this one first. What do you think right now? Is it a good time for collaring Apple, Google, etc.?
Collar's a type of trade that if you're bullish on it, theoretically, it's always a good time because of the fact that you're bullish. I think collars, in terms of setting up a collar, they're like snowflakes. No two collars are alike. Now, a couple years ago, one thing, Tully, that you may want to take a look at, just do a Google search on it, collaring the cubes. And there was a great article done by the Options Industry Council.
Our boys over at OIC, great study.
Oh, it was excellent in terms of like some of the ideal ways with which to put on a collar, why you would do it, when you would do it, time decay differentials, things like that. Highly would recommend that article. From my experience with collars, what I've found is that the main thing that you're trying to do with this is manage risk first. I like being able to look clients in the eye or talk to them over the phone if I'm not seeing them and tell them it's mathematically impossible for you to lose more than 7% of your initial investment. So one example, Tully, I have a newer client. He's never done anything with options before, and he is very bullish on gold as an example. Now, I have a very actively managed collar that I do in gold, which I talk about on the show all the time. But in his case, he really wasn't comfortable with the active management just because it was brand new to him. So what we're doing with this specific client is we're putting him in a July collar on GLD, and the differentials, it's about a 10% potential gain to the upside, and it's like a 8% potential loss to the downside. Interesting volatility also, Tully, if you go a few months out on the metals, but that's a subject for another day in terms of how collars can set up on commodities. But my point is that the main thing that you need to be cognizant of is, are you bullish on the stock? And if you're not bullish on the stock or the commodity or whatever instrument you're doing a collar on, then no, it's not a good time for a collar. If you're bullish on it, what I'm trying to do with my collars is set up a risk-managed approach to help the client be a part of something, but yet have a floor to the downside in some way, shape, or form.
Thank you for that, Uncle Mike. And, interesting question. Of course, Tully writing in about the timing of it as well. And Uncle Mike's right. If you are bullish, it's always a good time. But of course, comparatively, it was a little bit better earlier on, about a month or so ago, when Apple was obviously far higher. So from a volatility in terms of what you were paying for that downside put versus writing that covered call, from the options point of view, obviously from underlying price was more expensive. But from an options point of view, the collar portion was a little bit probably better from a vol perspective about a month ago, when Apple was a bit higher. Now we've retraced the puts are juicy. You're going to be paying a lot more for that collar. So just keep that in mind. But interesting stuff too. I think that collar study is where I always point people, Uncle Mike. You can find it on our site, Options Insider. You can find it at optionseducation.org, or just search for the name of the study. You'll find it on Google. Really interesting stuff. A lot of people tend to fall into two camps I've seen from the collar perspective. Some people are just married to the idea of the zero cost collar, and that's how they do all of their collars. That usually ends up with you doing the collar in the same expiration month. Not always ideal. I mean, obviously it's a zero net outlay, so that's what you're going for. That works. But, as the OIC found, a lot of other studies have found, if you play with the structure of the collar a little bit, you take advantage of some of the things we've talked about on this show in the past, like maximizing your time decay. So you roll the put out about 6 months, you keep the collar end, the short call end in the front month, so you're maximizing time decay on both legs. And over that 6 month period, if you were to repeatedly do that collar, as opposed to just doing that 1 6 month and writing the front month call, the optimally constructed collar would outperform the zero cost collar in most of those environments.
To add something to that, now that the week, the 6 month, 1 month, I would say, is probably a vast majority of the assets under management. Not a vast majority, but a pretty good chunk of the assets under management with which I do collars with is what I use. But now what's interesting is that and I talked about it last week on the show, with the weeklies now having not just 1 week and then going straight to a month options and the mad premium selling dash every Thursday morning weeklies, but now that we have 1 week, 2 week, 3 week, 4 week, and 5 week options, that's going to add a whole new dimension to that, especially because now I personally have the ability to make adjustments when I'm wrong on the weeklies, and that has added a whole new dimension to the collar.
Yeah, that's kind of the next level, the next step is going from the monthly to the weekly. I kind of leave that for the hardcore guys who have a lot of time to trade options. Of course, if you're listening to this show and writing in, you probably fall into that category anyway. And we're starting to see the first interesting studies come out on that, Uncle Mike, in terms of, you know it empirically that's going to be a better return for you, but we're starting to see the first hard data come out. I think Russell and some other guys did some interesting comparisons of doing the weeklies versus the monthlies and yearlies and how all that breaks out from a premium and net revenue perspective. So we're starting to see the first stuff of that. Certainly, if you want to take that OIC collar study to its nth degree, then doing the weekly versus the 6 month really does increase your bang for your buck. So interesting stuff.
Here's the old man dissenting view.
Oh, I like it. Here we go. Crossfire. Go to it, Alex.
Okay, collars are a great idea. Doing them this time of year is terrific, so you can tax shift gains. But here's the issue with collars. I understand everybody wants to buy the put. I rarely meet anybody who really wants to sell that call. I meet people who don't want to pay for the put. One question to ask yourself before I enter into a collar transaction is, might I not be better off paying for the put outright? In your heart of hearts, do you really want to sell that call? So I'm just throwing that out there as a question.
Amen, bro. You get I'm giving you an amen from that corner.
Volatility's cheap enough, just buy the put.
Yep.
Yeah, as back to old man days, as someone who worked on Wall Street when the term zero cost collar, we joked about it. We kidded that you could get it off carts that were selling shawarma and hot dogs. That's how popular it was. And the thing that made it so popular was it was zero cost. You didn't need any new money. And then if something ran up, you were disappointed or unhappy. So the thing you got to ask yourself is, in your heart of hearts, do you really want to sell that call? Because if you're selling a call to finance the put, I understand you need the put. Something to consider is maybe blend the trade. If you've got a position of 5,000 shares, do 2,500 collars and do 2,500 puts. And then, to Mike's point, you adjust, you roll. If the instrument trades down a little bit, then maybe you sell some more calls. You look at it as kind of an active strategy. But, can you sleep nights with the risk? I understand that that's the driver of the collar, but can you sleep nights knowing you're short the call? And, the industry has done a great job of doing the studies. And here's the thing. All option strategies work. They all work, but they all define a specific set of expected outcomes relating to time, price, and volatility. And the collar describes a specific expected outcome that I'm going to live in that trading range. I'm effectively creating a call spread. And am I comfortable with what effectively is a call spread? And if you're not, they close the whatever straight tomorrow and gold goes to $2,400 in 2 hours. I know it's an extreme example, but you're going to be really unhappy. So that's a question you got to ask yourself. Can you sleep nights knowing you've truncated the upside?
I want to ask that guy going by on the orange line, what does he think, Mr. Sebastian?
Sorry about that.
It's just like
that old
so it's like the voice of the thunder of God coming by over there.
It's like the Blues Brothers movie. How often?
That'll go away. Don't worry.
This is Chicago authentic.
It does. It adds that air of local authenticity. Well, there you go. There you have it, listener. Or should I say Tully? We have two, not dissenting, but two divergent opinions on collars and best way to execute them. And Alex brings up a good point. Maybe if you can sleep at night paying for that defense in your back pocket, maybe you can live without the call end of the collar. So two interesting ways to set up your defensive protection for your underlying positions. And thank you for everyone who wrote in this week, specifically Stephanie and Tully, and we'll get to your other questions down the road a bit. But for now, we're going to close out the old mailbag and dive right into our Around the Block segment.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the final segment of the show where we peer into the future and attempt to let the listeners know what we have on our radar screens and what we're watching for the next couple of weeks. And surprise, surprise, everyone's got their eyes glued to Washington. That really is a lot of what was going on. Of course, we were watching non-farms last week as well. Uncle Mike, I'm guessing that your BBI is a little bit lower today because you've been focused on the land of the metals and the land of fruit.
Yeah, I mean, just coming up, just also with the FOMC rate decision, I'm sure that's going to be a huge bit of news, as I say that. But yeah, I think that just coming up, there's Washington is the spot to watch. That's for sure.
The good old FOMC, market moving indeed. And as the dynamic duo over there from the land of Option Pit, what is catching your attention these days?
Just
Gold, euro.
That vol spread. I think that's really interesting. I really do.
Don't forget Zynga.
Takes the time.
And Zynga.
Well, Zynga, we don't actually tell anybody about that.
All those paying customers of Option Pit, go buy Zynga, then go home, and you're done.
That doesn't make the grade.
It does not.
Unfortunately, no. And Alex, what is catching your eye for the next couple of sessions going through the rest of the week?
Tax planning. If you think rates are going to go up, you're thinking of converting a conventional IRA to a Roth. Tax planning, year end. This is a critical time to do things. If you've got losses in a portfolio, you're a taxable portfolio, and you've got some gains, harvest them, offset them. Get it done before the end of the year.
I need to do some of that myself. I keep saying I'm going to sit down and do all of that tax planning, and then something else seems to come up, like a radio show or something, and it gets pushed to the back burner. So one of these days, Alex, maybe I'll invite you over, and we'll sit down and have a nice little tax party. What do you say? Sound fun?
That's the best offer I've had all day.
That's a pretty sad commentary on the life of Alex Jacobson right there, listeners. So there you go. Give Alex a call over at OX and give him some better offers than that, and he'll be a happy man indeed. Well, unfortunately, that's going to do it for this episode of the Option Block. But before we go, I like to check in with all of my cohorts here on the old All-Star panel to see what they may have in store that might interest you, the listener. And let's start off with the land of the L train these days, the dynamic duo of Andrew and Mark. What is coming up in the land of the pit that may interest our listening audience?
We're having great meetings all week, kind of just working to make our gold and platinum programs even better. We're planning for a cool chat service that may have some cool partnerships. And we're looking forward to, and you know what? Go out and buy my book if you haven't bought my book, by the way. Seriously, go out and buy my book. And let's do that.
Give them the name again so they know how to find it.
Exactly. It's the Option Traders Hedge Fund.
There you go, listeners. Search for it on Amazon and ignore those 1-star reviews. It's the 5-star reviews you want to look at.
Exactly.
That's where you want to go. All right, thank you for that. Excuse me. All right, thank you for that, Mark and Andrew. And Uncle Mike, what is coming up in the old KYO webinar train station?
Well, some people think that the Rose Bowl is the granddaddy of them all when it comes to New Year's Day football games. But guys, I'm telling you about what the granddaddy of them all in terms of webinars is coming up this Thursday night. I have done probably 7,428 webinars in my entire career, and maybe not quite that many, but who knows. And what we're planning for this Thursday night at Know Your Options is something that I've never done before and something we've never done before. And we think that this is going to be the granddaddy of them all. And that's what we're going to be billing this as. So hopefully we don't disappoint. What we're going to be doing, it's going to be a webinar talking about the fiscal cliff coming up or not coming up, whatever the case may be. And we are going to have, as of right now, we have 5 people that are going to present on the webinar. We're going to talk about tax planning. Feel free to come out, Alex. We'd love to have you come watch that.
Can I come to that party as well? Like I said, I need that.
It's a great party. It'll be a great party. We'll talk about the estate gift taxing laws that are going to expire at the end of this year. We're going to be talking about implied volatility. We're going to be talking about weeklies. We're going to be talking about where the market could go, why it could go in a certain directions, why it may go in other directions. And this is going to be the most exciting webinar that I've ever been a part of, and I have done a lot of webinars in my day. So with that, come check out our Granddaddy of Them All webinar this Thursday night at 8:30 p.m. Chicago time.
All right, a man not prone to hyperbole, listeners. So if Uncle Mike says it's the biggest and best ever, then I think you want to check it out. Head over to knowyouroptionsinc.com, and you can register there for this Granddaddy, indeed the mother of all webinars. Of course, not to be left out, Alex, I think you have perhaps the uncle of all webinars coming up soon as well. That is about the Idea Hub. Am I correct?
Yeah, the seminar schedule has wound down for the year, but the webinar schedule is still active, and I'm doing a Meet the Ideas Hub describing the tool tomorrow at 3:30 Chicago time. Joe Cusack, who did the show last week, is doing vertical spreads on both the 11th and the 12th. And to attend one of our webinars, you don't need to be a customer. You don't need to have an account. Just go to optionsexpress.com, hit on the education tab, and you can see our webinar schedule. You can register for any webinar. They're all free. Again, there's no prerequisite, but Ideas Hub tomorrow at 3:30. And then there's a full schedule for the balance of the year. Dan Garbza we'll be doing one on the 18th, Future Strategies for 2013. Dan's a really talented guy. I've been on many panels with him before I came here to Options Express. But just go to the Education tab. You can see all the offerings, and they're all free.
All right, thank you for that, Alex. I think that's a great point to reiterate here on the show, too. We don't bring it up often enough. We talk about OX customers and all the different tools you can get for being an OX customer, just for logging in and checking out those different areas, Idea Hub, that sort of thing. But all the educational stuff we talk about here, the webinars, that's all free. You don't have to be an OX customer to go get it. So if you're not an OX customer yet, you can still surf on over, check out what Alex has brewing for you tomorrow and some of the other webinars they have over there as well. I have an idea you'll like what you see, but hey, you don't have to be a customer to check it out. So that's a great thing that I don't think we hit on enough here on this show. So everybody, not just the OX customers, can get in on some of the Alex Jacobson love tomorrow. So check it out for yourself, listeners. And of course, if you'd like to learn more about any of the topics we discussed on today's show, the educational topics, the analytical topics, the unusual activity, some of the breaking news from the options market, or any of the other discussion topics we hit on the option block today, then by all means, surf on over to theoptionsinsider.com. You can find all of that and more, including all of the archived episodes of this program and all the other programs on the Options Insider Radio Network, so you could listen to options content to your heart's desire. So by all means, surf on over to theoptionsinsider.com, where you can find us on iTunes or Stitcher. And of course, if you have a question for us, if you'd like to join Stephanie and Sully on the listener mail segment, then you can shoot us over a question at Twitter. Just DM us. We're at Options on Twitter. Find us on Facebook. You can use a comment, leave a comment for us at theoptionsinsider.com, or even send us an email, questions@theoptionsinsider.com. We just ask that you put question for the option block in the subject line so we know which show you're referring to. And unfortunately, that's going to do it for this episode of the Option Block. But on behalf of myself and all of my fellow members of the old All-Star panel, we want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.